Welcome to Mad Money. Welcome to Cramerica. My friends, hey man, I'm just trying to make a little money here. My job is not just to entertain, but to educate, to teach. So call me 1-800-743-CNBC. Tweet me, Jim Cramer. Everybody's wringing their hands about how President Trump fired the head of the Bureau of Labor Statistics in response to that jobs report fraud. It's the kind of thing Wall Street loves to worry about. But you know what? Man, I take my cue from the market, and the market roared today. Dow gaining 585 points. S&P up 1.47%. And NASDAQ pole-vaulting 1.95%.
House of pleasure.
It seems we all have an opinion about the president's somewhat rash decision to be diplomatic about it. But I think that misses the real point here. See, President Trump has done everything he can to strong-arm the Federal Reserve into cutting interest rates. And that labor report is the best evidence that the president's right. See, this is a W, a win for the White House. Take the win, for heaven's sake. The Fed's never going to cut rates if the job market's too strong. So this newfound softness is a huge positive. Hence today's terrific rally. And there is softness. Come on. Long-term interest rates have plummeted, despite the federal government's enormous financing needs and supposedly inflationary tariffs. If they're inflationary, most Americans haven't seen it yet, although the most serious ones candidly haven't really hit yet either. All the more reason for the Fed to cut. But in the end, whether you love Trump or hate him, the market clearly doesn't care one whit that he fired the head of the BLS on Friday. Stocks are showing extraordinary resiliency in the face of something that was supposed to be really negative, at least according to all the articles in both the conservative and liberal press. So many of the stocks that have been strong on Thursday and then got clubbed on Friday bounced right back today. Some of them stronger than when they fell. Now, some of that may be because the Fed the Fed has to cut. Maybe even before September. I mean, that's how weak the employment numbers are. But at the heart of the market's resilience as well, what do we think? The Magnificent Seven. Yeah, I know. After all this, they're still the winners. You know what? We got to define winners right here. I like to look at growth. You know, I think growth is the most important determinant of higher stock prices. I make that point endlessly here. First, let's take them in aggregate. With 6 of the 7 already reported, earnings growth for the Mag 7 is expected to be 27.2% this quarter. The rest of the S&P 500, excluding the Mag 7, 7.5% earnings growth. Oh, that's almost 20 percentage points different. 20. It's incredible. And how about revenue growth? Mag 7 is on track to see 15.5% sales growth. The other 493, 4.5%, an 11 percentage point difference. In the world of statistics, that is simply blow away. You rarely ever see any one group of anything beat the S&P 500 so convincingly. How did they do it? Look, you conclude that the rest of the S&P is just a bunch of losers. Something that's not really true, but it does have a lot of losers in it. The other way is to look at the mostly magnificent quarters we've seen from the 7 themselves. So let's do this. Let's go over from best to not best, because I refuse to call any of these the worst. I want to start with Microsoft, because this one has become completely sainted. Microsoft's doing incredibly well in every single phase of its business. The basic enterprise software product is the strongest I've seen it almost since it started. It's aided by rapid adoption of Copilot, Microsoft's AI product. LinkedIn's just doing really strongly. Their video games selling spectacularly. Azure, the cloud infrastructure division, is outstanding with a huge acceleration in growth this quarter. Finally, Microsoft owns a giant slug of OpenAI and its hugely valuable ChatGPT fundraising round at a $300 billion valuation. Microsoft owns 49% of the for-profit portion of the company. I followed this company for a long time, since it came public, even before then. There's always been one thing, one fly in the ointment, one piece of hair on it. This time, the quarter was flawless. Yes, flawless. Next best, Meta Platforms. I am agog at the numbers that Mark Zuckerberg's putting up. The most important one not even talked about on Wall Street enough. 3.5 billion people use at least one Meta product each day. Come on, that's almost half the planet. That's insane. The company's printing money, which is why it can go into the equivalent of free agency and hire incredible talent, but it doesn't even matter. You can't even see it in the margins. You know that if you advertise with Meta, the ads have more reach than anyone. They'll even design the ad for you, and it will most likely outperform any agency-built ad, although they don't knock the agencies in the conference call. Meta even has businesses it hasn't even begun to monetize, because I think it's so busy monetizing others. Who even knows but how much WhatsApp is worth? Mark talks about the Ray-Ban glasses as the best format for pretty much everything, Facebook, Instagram, WhatsApp, and everything else that they have, including AI. I own a pair. Actually, I gave my wife, I gave my kids a pair, I gave my stepkid, I gave everybody a pair. I just give them away. I don't know. I think that these things are so darn cool. And they, you know what? I never thought they could move the needle, but after this conf call, now I'm not so sure. They could be real profits here for this company. Like Microsoft, Meta's buying a huge number of NVIDIA chips for its AI offering, Meta AI. I don't use it much, but you know what? After the conference call, I'll probably add it to the roster. Third, Alphabet. Google Search and YouTube are doing amazingly well. You know what? I thought that Gemini, their AI platform, would cannibalize regular Google. Wrong. It hasn't. Instead, they're complementary. Business is very, very strong, and Alphabet had a remarkable quarter for all divisions, including Waymo, give it its due, which is building a nice lead over the rest of the autonomous vehicles in the space. They Microsoft, Meta, are buying a gigantic number of NVIDIA chips, and that's who wins. Next, Apple had a tremendous report, better growth than anyone expected. Those who were worried about a slowdown in the service revenue stream got their heads handed to them. Cash continues to build. After speaking to Tim Cook before the quarterly report, I got the impression that some good things were coming for AI and the perceived weakness. Tariffs, right now Apple's moved production for most U.S.-bound iPhones to India. But if the tariffs on India really go through the roof because of buying Russian oil, they'll just switch back to China. I'm not concerned. That's right, I'm not concerned. They have the money to do a major acquisition in either or both financial and AI verticals, and I think they're going to do it. Fifth, Amazon. Well, Amazon shouldn't be troubled. It had a terrific quarter, including fantastic retail sales, stunning advertising revenues, decent numbers from Amazon Web Services, AWS. The reason the stock got hit and keeps getting hit is there's a perception that Amazon Web Services growth is slowing. It was flat from the previous quarter, and that's being viewed as a real weakness. I'm hearing that Amazon may be market share donor to Microsoft and Alphabet in cloud computing, and they might stay that way until they stop trying to make do with their own chips and instead buy more, yes, of the ones from NVIDIA. I'm not sure this is a totally true narrative because I think AWS did fine, but I do hear about the resistance from young AI developers who are reluctant to use Amazon's platform to develop their own products. I hope management comes on right here and explains more about this issue. Otherwise, I fear that this is an important position for my Chapel Trust is going to keep getting smoked. Help us, Amazon. I know, I'm greedy. Tesla. As a car company, it's a mess. As a tech company, it's fantastic, especially now that the CEO is being compensated correctly with that $30 billion worth of shares. Mazel tov. I'm convinced that Tesla's worth owning for its autonomous driving and robots, but I accept that the rest of the company's ballast right now. Finally, there is NVIDIA. We don't know how it's doing. It reports on a different cycle, with its next report coming later this month. But we do know this. When you hear that Amazon's not doing well enough because it didn't order enough chips from NVIDIA, like all the other hyperscalers, well, guess who's really the winner? NVIDIA. Here's the bottom line. Even though the Mag 7 has one hand tied behind its back with Tesla, we had tepid reactions to Apple and Amazon's numbers. The fact is, these companies loaded with cash, not outrageously expensive, nation states, I call them, with multiple revenue streams and tight expenses, just can't be beat by any stretch of the numbers or the imagination. Oh, wowza. Let's go to Leslie in California. Leslie.
Jim, Chevron, buy, sell, or hold.
I read that upgrade today. Chevron is win. Chevron is win. Why do we say this? Not just because Mike here's put together between Hess and Venezuela. An unbelievable combination. I like the new write-up today that we saw, a recommendation. I am with it. I'm with Mike. Let's go to Steve in Virginia. Steve.
Yeah, Jim, thanks for all that you do. My question is, Colgate-Palmolive had a decent quarter, and they, reaffirmed their guidance. But the stock seems to just keep going down.
Look, the best one in the group, by the way, is Kimberly. Mike Hsu did an amazing job. Kimberly is the right one. Now, I will say this. I thought the Colgate quarter was darn good. I like the Hills. I think Total's doing amazingly well. I don't understand why it's acting the worst of all of them. Maybe it's because of the high multiple, but I would not leave Colgate right here. I just can't. But boy, that's it. Noah Wallace, come on the show. I know you don't like media, but this is the right place to go. Look, right now it's clear that the Mag 7 just can't be dethroned, even with some muted earnings reaction from some of its members. Oh, man, buddy, tonight, what's cooking with Shake Shack? The stock fell after earnings last week before rebounding today. I'm seeing investors are getting a rare buying opportunity. Reddit turned engagement into profit. I'm diving into the numbers of the social platform's impressive quarter. And by the way, software company Cloudflare is working to protect your intellectual property from illegal use by AI. I'm hearing all about how the company is policing the internet with the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.